one here is seller financing. Now, it's the most powerful form of financing. It's the easiest to get by flapping your lips and just asking. It's the cheapest, it's the easiest to qualify for, and it's the fastest. There's no cost, no fees. The only cost that's going to be associated is possibly a deposit or a binder to get seller financing. And a lot of times we can negotiate those down to pennies on the dollar, considering how much equity you're going to get at closing on these deals. Look, we're sitting here tying up master lease option projects. That is a form of seller financing if there is a need that we want to go ahead and do an option. They're allowing us to get in, lease the property, and then option it to purchase it later. We can tie these properties up for as little as $10,000 to $100,000. Why go through the hoops to go jump and try to go ahead and acquire financing and purchase it? We can just get in there and control the asset, right, with a master lease. And then what we can do is capitalize on all the new income, just like on the deal that I called on live. That's what it's all about. Now, we haven't negotiated that deposit. I can assure you that deposit is going to be very small. We're not talking a lot of money. And that property has a lot of money left in it because we know what its current rents were pulling in, and we also know what the occupancy was and what the market occupancy is. And when we fill those vacancies and raise those rents, that one deal can put you into early retirement, folks. All right? No application. Just like the senior living facility. They didn't send me an application. No. It was a done deal. Like I said to you, I spoke with that person a couple times. Never met him face to face. Often no personal guarantees or liability. They didn't ask for a personal guarantee. Nope, we flew our professional out there. They met face to face. That deal was done way ahead of that time. But when they flew out there and saw that, we were in the money. Often no interest, no payments. If the seller asks what the loan is for, you tell them to pay him and for your pre-development or improvement costs. This is if you go ahead and subordinate, have them subordinate, and you're going to be taking out a new loan I'm talking about. Okay? Often there's no payment, no interest. All right? Often the seller, this is on subordination, often the seller will want this to be stated, guys. They're going to want it to say seller may require that the money is only spent on the project. And it's in the verbiage that I gave to you. Remember, this funds will only be solely spent on the project. It's right in there. That's right in there for you already. Okay? This is just recap. Then we have conventional financing. Okay? Conventional financing, that's good old bank financing. Remember, it's cheap, it requires equity or down payment or based on the leaser or purchase price or value. And remember, it's always best to have leases in place to show that there's strong interest in the project. This is going to take 60 to 90 days, sometimes even longer. It's the longest. It takes a long time. Seller financing is instant, right? Would you rather have it just instant, just done? Absolutely. All right, page 106, commercial loan brokers. They go find money so you're free to find deals. Is that important? Yeah, bring in the professionals. Let them go find the money. Use them. They shop lenders for you. They go find money for you. Always have an attorney review all agreements. Don't go out there and sign agreements without having an attorney review them, okay? Get references because this is critical due to a high number of lenders that don't come through. Add a clause that states that if the property appraisal is low, you are not obligated to pay any type of a commitment or broker fee. That'll do away with the little scam that they had when they were out there saying, look, we need a $100,000 or $50,000 deposit, and if it appraises too low, you don't get your deposit back. Well, here, let me put it back on you. How you like this? All right? How you like this now? Look at them apples. If the property appraises low, I'm not obligated to pay commitment or broker fee. How you like that? If appraisal is not accepted to the borrower, then this agreement is void. Okay? I'd take care of that. Get enough time to allow the broker to find you good product. I call it product. That's the verbiage, guys. Good product. Show me some good product. Don't sign more than one commitment letter. If you do, have an escape clause. Include something to the effect of, write this down. If another lender provides commitment letter first, this contract is void. I'll slow down. If another lender provides a commitment letter first, this contract is void. Also insert a clause that says no fee is due if the loan will not close due to circumstances beyond your control. But never ask for a list of their lenders or bypass the broker direct to the lender. Now, I have a lender, his name is, or financier rather, his name is Guy. That's his name. Guy is a good friend of mine. And he knows that I would never circumvent him for anything because I have a relationship with him. Okay? He is the type of person that I can call and tell, hey, I got a deal. He deals with many different institutions, many different types of money. And he put me in touch with this woman, Brenda, one time. And I'm the type of person where I didn't even want Brenda's number because I didn't want Guy to think that I was going to circumvent him and go back to Brenda. So I didn't take her number. Next thing I know, my phone's ringing, and I didn't know who it was, so I answered, and it turned out to be Brenda. And I said, is Guy on the phone? She says, no, he's not. She said, don't worry about Guy. I have a relationship with Guy, and now I have a relationship with you. And she's the underwriter to a huge bank. All right, last year I attended the UBS Bank closed door meeting that everybody wants to get in. All right, everybody wants to be there. And Brenda is somebody that can perform. She got me a commitment letter like that on a project, like this, anytime I need it. She's there. She performs. You want her number? Yeah. I bet you do. Okay. Now, you don't want to ask for the lender's direct line to the underwriter, but you do want to get the underwriter on the phone at the end of the day. And that way you know that you're talking to real people that can perform. Okay? Don't pay more than $10,000 in due diligence and commitment fees to cover their costs. Require a refund of any unused amount. This is the deal. Usually it's about 10 grand. What's the money spent on? The money spent, once they get a commitment letter to you, it's $10,000 deposit. I've even seen up to $25,000. The reason being it's more is because it's a bigger project. It's going to take more time. They fly out, covers their expense. They order an appraisal, covers their expense. They fly home, covers their expense. At the end of the day, that's it. Any money they don't spend, they should send it back to you. If they're asking for more money, you're probably talking to the wrong people. Buy more time in terms if needed, always. 5 to 2 points for conventional lender or 1 to 3 points for broker. Guys, if brokers are out there trying to get 7, 10, 15 points or whatever, you got to question what is going on, all right? Bigger loans are often easier to get. Priority handling. For the longest time, it was 10 million, 10 million, 10 million, 10 million. That's all I heard, even from Guy. Is the deal at least 10 million? Oh, they just don't want a loan on that, Terry. They just don't want a loan on the smaller deals. I said, why? He says, well, I'll tell you what I'll do. I'll go ahead and put it together with a few other packages and we'll submit it. I said, okay, do that then. Let me know. Phone rings in 2 hours. They said they'd do it. All right. Ask them for a list of what they want and provide it to them promptly. All right. That's it, guys. When you're dealing with these loan brokers, you want to tell them everything. They're the people that you don't want to fluff. Tell them the good, bad, and the ugly. Write that down. Tell them the good, bad, and the ugly. You want them to know everything so that way when they're ready to fund and all of a sudden something comes up and they say, why didn't you tell me about that? And you said, well, I don't know. I want to get the deal done. Well, if you would have told me, I would have just, this is a mess. Now you put my credibility on the line with my underwriter, and I just can't believe you did that to me. Now it's all a waste of time. Now I can still do the deal, but I got to bring it over to this lender who doesn't care about that little hiccup. So just be upfront with them if you're going to be creating a relationship. Okay? You don't have to ask me how I know that because I don't. I practice it. I'm very straightforward. Okay? Now, page 107, the process. Funding request letter. That's next, and then the executive summary. Tip. Send ES. They're going to ask you for an ES. That's the verbiage. Stands for executive summary. Okay? And ask if they want the due diligence, which is DD, the DD package, the due diligence package, or the DD book or project package sent to them. All right? Will they need additional financial statements, yours and the property plus whatever they want. And guys, if they want your financials, understand that it's not really your financials. That's going to be your credit partner's financials, because if you're up front, they know it's not going to be your financials. It's on the merit of the project, and if they need somebody with credit worthiness, we bring in the professionals. You guys get that? Hello? Okay, you're still with me. All right. Add a resume or bio if you have good credentials, or add somebody else's and just say, this is what it is. This is our partner. All right. Now, you will receive a loan proposal with fees. It should be non-binding. Consider this preliminary approval. Okay? What it is, you're going to see a loan proposal. So circle that. That's the loan proposal. All right? Thank you. All right? Yes, John. All right. You accept, renegotiate, or reject? Who's going to accept? Raise your hand. Who's going to reject? Raise your hand. Who's going to renegotiate? Raise your hand. He smiled after he knew where I was going with it. Guys, always renegotiate. I don't care if it's the best dang terms in the world. I don't care if the terms, you sit there and you do the happy pee-pee dance. Get out there and renegotiate for better terms. The reason why is because if they say we cannot renegotiate better terms than this, then you know you got the best terms. If you go there and you renegotiate terms and they sweeten the terms, then you know that you didn't have the best terms. Don't you want the best terms? Always renegotiate. I agree. Okay. Now, if approved, you get a commitment letter with final figures and conditions. Commitment letter, that's a promise to fund. Your signature means that you owe the fees. So if you sign, you owe. You sign, you're committed. Unfortunately, many of these guys are promise breakers. That's why relationships are worth more than money. Because if you have a relationship, then the person you're dealing with has their name on the line with the underwriter. And if you know that you have the right people in place, you're there. If you sign, you're responsible. If you sign, you're obligated to pay the broker fees, whether you close or you don't close. Write that down. If you sign, you're obligated to pay those broker fees regardless if you close or don't close. The good thing is if you close, you can deduct the cost from the loan. Let me say that again. You can close, you can go ahead and deduct the cost from the loan. Tip, don't sign a commitment letter and pay fees too early in your due diligence period. Be sure the deal is real, and it'll go forward. The stronger the borrowing project, the more negotiation leverage. Okay. Cool. Master lease. This is it in a nutshell. This is just a recap for you. That's the master lease concept. Seller agrees to lease you the property for the current gross income. Make a note. That's what's coming in. You pocket the new income. We've been talking about this. By new management, raise rents and fill the vacancies. Lease the property as a tenant from the owner, and you become the one owner, hence the name master lease. This gives you the right to sublease to existing tenants. We get in there, we raise the NOI and increase the R of the after repaired value by doing any minor repairs if need be. Then we can sell or refi. When to pay all cash. Any deal a hard money lender won't loan on, if it's good enough for them, it's good enough for you. Okay? Remember that. So let's talk about dealing with loan brokers because before we get into appraisers and exit strategies, because again, dealing with loan brokers, I'm just not finished with this section. I think it's very important for you guys to know the do's and don'ts, don't you? Absolutely. So do's, tell them all the facts, no secrets. Like I said, I put it right here for you so you can reference back to it. Get them the docs they need quickly, because look, if you don't get them the docs, that means that you're dragging your feet. You drag your feet, they drag their feet. Don't be the one that puts a hiccup in the deal. Make sure you have a clear understanding of their duties and yours. Follow up to see if the loan is getting worked timely without being a pest. So that means call every single day. It was a joke. Just follow up with them and make sure, check in with them. Guys, it's all about getting timelines. How long do you think it's going to take? Okay, I'm going to call you the day before you tell me, and I'm going to see if it's real. My guy knows that if he doesn't perform, he knows to call me. He knows if it's going to take longer to call me, right? That's when you know you have somebody that's working. Guys, these people are working. They're the same thing as commission brokers. They're the same thing as your bird dog brokers. They're out there. They're working on commission. The loan doesn't close. They don't get paid. So if you submit them a bunch of turkeys and you can't get them closed, it's not going to be long until you call them. You might not get a call back. So make sure that you're submitting in the right deals, all right? Get legal help before signing a commercial loan broker's agreement. That's very important. And also ask for a couple of names or satisfied customers before committing. Right? Well, the way I found Guy was I found Guy through another person. Referred him from another person. Referred him from another person. That's how you find these people. Okay? Do a background check on the firm before committing. That's easy to do. It's very easy to do. Limit the time a broker has to get you a commitment and then to close thereafter. You want to go ahead and limit the time. Ask them how much time. Guys, the more time you have, the more real the deal is. But don't wait until the very last minute to get the money. That's why I said acquire the financing and get the commitment up front. That way you can go ahead and know that the lender's going to go in and do the phase one. They're going to do the MAI. So if that's at the beginning stages, you're setting up your financing from day one. Don't be one of these people that wait all the way to the end and try to jump through the fiery hoops. It happens all too often. I hear it. Guys like, Terry, I love doing business with you because as soon as you recognize an opportunity, you call me. Only if everybody would call me and give me as much time as you get. That's the deal, right? Little does he know, I got a heck of a lot more time than I tell him I got. Because I have extensions. Because I want to make sure that we have enough time to get her done, as they say. Get her done, all right? So, add a clause that says if the property price is low, you're not obligated to pay the broker fee. Again, be careful. We put that in there for you. Give yourself enough time to close so the broker isn't under distress or duress to rush a loan. It's all about you don't want them to have to rush. Okay? Now, don't do this. Don't try to convince them a dud is really a deal. Because, guys, they're professionals. They see the writing on the wall. And if they look at the deal and they don't call you back and then they finally get back to you and they say, I'm not too excited about the deal, guys, you should check out the deal. All right? Make sure you're doing a good deal. Apply for a loan with several brokers simultaneously without disclosing that you are. First one to the finish line. Thank you very much. Pay a large commitment fee up front. Okay? That's the cost they incur. If you pay a large commitment fee up front, don't do that. Don't pay a large commitment fee up front. Assume the deal is done until you see the check. Guys, that's the same as residential, right? A deal is a deal and it's done when the check arrives. Don't count your chickens before they hatch. Okay? Assume this. Don't try to go behind the broker's back and steal the lender. We just talked about that. Do a second loan with the same lender and do not pay the broker. Don't do that, meaning don't circumvent them and do another deal, okay? Don't ask the broker the name of his or her lenders before the signed agreement. He'd rather give you his bank account number. That's true. Or his wife's number. Put all your hopes on one broker until she has proven their value. Don't do that. That's why we say move forward simultaneously. I'm going to go ahead and elaborate on that in 1 second. Sign 2 commitment letters for the same loan. It's okay as long as you haven't installed an escape clause if another gets approved. If you say first one that gets approved, I'm going with, if you have that clause in there, you're okay. But just to elaborate one more time about going after two different loan brokers at the same time, if you call up a loan broker and you say, hey, this is Joe. Look, I got this deal, and I'd like for you to go ahead and do it, and you're a referral, and I think that you can perform, but I just want to tell you, I got 6 other people on the deal. First one that comes to the finish line, so you better work fast. It's not going to happen. They're going to say, too much competition, I'm done, you're shopping your loan, I'm not interested. If you do it just the way that you should do it, and that's hold your professionalism and say, look, I do a duty to myself. I got to get the deal done. I want to do business with you. They're going to ask you, are you shopping the loan? Just say no, because you guys won't be shopping loans. But, yeah, you have other people looking at it because you want to get it done. Say, look, I want to deal with somebody who performs. So, yeah, I have somebody looking at it, but no, I'm not shopping it. That'll put them at ease. All right, page 110. Appraisers. Not all appraisers are equally qualified. Isn't that the truth? Okay? And we talked about MAI already. So we know that this prevents the BS between the borrower and the appraiser to bring an inflated property value. There are certain professionals and designations, again, MAI is where it's at, Member Appraisal Institute, because the demand for the MAI services are often command appraisal fees of 2 to 3 times higher than the average appraisal fee. Write that down. MAI requires much more money. Don't be cheap and try to go after an additional, a different appraisal that's not MAI certified just so you can cut costs. Because if you're looking to package your deal to sell it, somebody else like you would want to know if it was an MAI, right? Do you want a BPO or an MAI? Huh? Okay, good. Good, all right. So another highly respected is the SREA designation. That's the Senior Real Estate Appraiser. It's not as good as MAI. The only difference is that MAI, again, that designation, it requires training. So if you order an MAI appraisal, it's likely a lender is going to go ahead and want to order their own anyway, which we just covered. So you may get hard money lenders to accept yours with a review. Remember I said the review, the stamp? Get it reviewed, get it restamped. That's going to be for hard money. The problem is you must verify the value as part of your due diligence before you release your deposit. So here's your options. Write these down. Number 1 is order your own appraisal immediately, and then the lender may order another, okay? Both of which you pay for. Or number 2, know where you're getting the money in advance and ask the lender to order it immediately. Because you're going to have to get one anyway. Just ask the lender to order it. Now there's going to be something else you're going to add to here. You'd add this. Since you're going to go ahead and get the lender to order it anyway, you need some verbiage in there that says you get a copy of it. Follow? It's important. Okay. Now exit strategies, page 111. When we get to exit strategies, it's important to understand this. You must know your exit before you enter. You got to know the other door. Benefits of keeping income property are appreciation, depreciation, cash out, and cash flow. Appreciation are the way that regular investors, conventional wisdom, everything that I'm against, purchases property, but it's one appreciate.